Hi there, Chris Colby from GC Property Group, and today's video is about how to use the Buy, Refurbish, Refinance and Rent strategy calculator that you can find on my website. If you haven't got this calculator already, I highly recommend you go there and download it. You can find it at www.gcpropertygroup.co.uk. So without ado, here is me voicing over how to use that video. Hi there, so yes, I'm going to show you how to use the Buy, Refurbish, Refinance and Rent calculator. Now this is available on our website at www.gcpropertygroup.co.uk. So if you go there and then scroll down to the bottom, you'll see a link for calculators. If you click that, then we've got three calculators available, one for an HMO, one for a BRRR, which is what this video covers, and then a buy to let one. So what we want to do is you want to click on to the BRR calculator and let that load. So I previously got it loaded up, so here it is. So what I want to do, if I just zoom, is just talk you through how you can use this calculator through a Buy, Refurbish, Refinance and Rent calculator. So the whole purpose of this strategy is where you are buying a property that needs work doing on it, whether that being a bit like modernising, etc. You are doing the refurb on it. You're then refinancing it, because what you're looking at doing is buying it in cash. You're refinancing that, so you're getting the mortgage against that, and then you are renting it out. So if we use the calculator here, what you want to do is populate the boxes that are in white, because the boxes that are in yellow have formulas in them that give you certain information. But what I want to do is just talk you through all of those. So the first thing you do is put in your house price. So in this example, I'm buying a house for £42,000. So when buying that house, there will be certain fees. Obviously it costs money to buy a house. So within fees, what this has done is just calculated what those costs are likely to be. So in here we've got 3%. So what that covers for is the stamp duty. So all my guides, I'm only ever looking at buying through limited companies. So it means that there is above £40,000, there is a flat 3% stamp duty on it. So what that is doing is that is timesing that figure by 3%. You're then adding £1,000 for solicitors' fees, and then £750 to cover things like building surveys, etc., because you always want to get a building survey done. The next field we have here is what the likely end value is. So I will be doing another video on how to work out the end value of a property quite soon, so watch this space. But what you do is you try and figure out what the end value is and enter that here. Now when you've done that, this will populate what it believes is the remortgage value. So that is the money you can pull out of the deal. So typically with a mortgage, you always want to leave about 25% of equity within the property. You can get less. I think you can get 20%, and even more extreme cases you can get lower than that. But 25% is a pretty good buffer, because it does allow for the property markets to go down and up, and you're never in negative equity. Excuse me. So the next one you have is what the refurb cost is going to be. So it's always worth getting a builder, or if you're particularly good yourself, trying to cost up what the refurb would cost. So in your most sort of 2-bedroom, 3-bedroom terrace houses, you're probably looking full refurb, unless there's anything structural, between about £18,000 to £25,000. So, as I said earlier, we're always looking at buying in cash. So you can either buy outright in cash, or what you could do is use bridging finance. So I would use bridging finance for this. So this calculator was built up using bridging finance. So deposit you need, this very much varies on the actual project and also the lender. But in this example, what we're saying is you need 35% of the value of the house for your bridging finance. So if it is different, you can just alter the formula here. But that in this instance is £14,700. So that would mean that the bridging loan that you need is 65% of that particular value. So it could be that you also want to add on the fees for doing the refurb as well. So if you want to do that, you can just literally put add and then cell B6. So your bridging loan is that, and what that will do is that will alter your figures because obviously you're borrowing more, you'll need to pay back more. But I'll remove that for now. So on the basis that it's 35%, it'll be 65% loan that you're getting. You then want to put your refurb time in, because with bridging finance you pay on a monthly basis, so it's quite expensive finance, so you need to make sure that you put the right time in. So what I would always look to do is overestimate on your time, because most of the time you can end bridging finance early. However, if you need to extend it, you could find there are more fees, etc. So I think in this instance, let's say this is going to take 6 months worth of work. No, that's probably a bit much. Say 4 months worth of work. That will then calculate what your bridging fees are. So the way the bridging fees have been done here, it's basically working it on 0.75% interest per month, which over the year is around about sort of 10%. So as I said, it is quite an expensive way to borrow, but it does work very well for this kind of thing. So the next thing you want to do is you want to make sure you put down what your predicted rental income is. Again, there are ways to do this of assessing an area for what the potential rental income is for a type of property. I will do a video on that in the near future, so watch this space. You then want to have a look at what your mortgage costs are going to be. So what this will be on the remortgage value. So the end value, the element of mortgage, and then times by the interest rate. So this calculator calculates it, it's a 3% interest rate. So it could be more, it could be less. So you just need to alter that with whatever you're doing at the time. So it's not set in stone, but it's always safe to say around the 3% in the current climate in 2020. Monthly maintenance and management. So this is a flat sort of 20% of whatever the rental income is. So typically what we say is the management side of it is 10% of the rental income. So most estate agents to manage it will charge 10%, but it's also worth taking 10% of the rental income to the side just to help with any maintenance and void periods that you might have. So when I say maintenance, things like, oh, the washing machine's just stopped working, so you need to get an engineer out to look at it. That would then provide you with your monthly cash flow. So what that is your rent minus your mortgage payment and then your maintenance and management charges. So that will again give you your annual profit, by timesing that by 12. So what we then have down here is we then sort of look at what kind of investment is needed to do the whole project. So what that does is that looks at the cost of buying, the cost of the property, the cost of buying it, and then the refurb. So for this particular one, we need £68,000 worth of investment. This one is if you are leveraged, so if you do bridging finance. So this would look at, so basically the bridging finance covers that, but you'd still need to find the fees, and then the way the calculator's worked out at the moment, you'd still need to find the refurb cost and then the bridging finance cost. So overall, it would be about £40,700 that you need to find for this property. So if we were to do this and we were to be able to refinance at this value and it was this refurb, etc., the money that we leave in that deal would be about £2,010 once it's refinanced. So again, it's £42,000. It's going to be worth £88,000 at the end, and you spent £23,000 on it. So there's quite a lot of equity to be made in that particular deal. And even if you were to do it leveraged, so you would borrow £27,000 from a bridging finance company, you'd still leave £3,375 in that deal. So your return on investment, if you were to buy via cash, would be 128%, or if you were to buy leverage, would be 76%. So what you can also do with this then is just play around with the particular figures to say, do you know what, actually, that's probably not going to take me 4 months, it is only going to take me 3 months. You put that in, that changes your ROI from a leverage perspective because you're not having to borrow so much, which means your bridging fees have come down. So if I put that back again, you see how that's come down by a few £100s. It might also be that actually, do you know what, the way the market's going, it's probably only likely to refinance at £82,000. You can put that in there and it will still give you what your ROI would be on that and how much money is left in the deal. So to be honest with you, I still think, you know, even leveraged, if you're leaving that much in the deal and making that per month, it's not a bad ROI. And say, oh, actually, do you know what? The area's going up. We could get 500 a month for it. That would change that. So it's one of these things that it's completely adjustable. I usually, you know, you take this calculator as a basis and then change it for any particular deal I'm working on, because it depends, I say, what finance I can get for it at the time, what the rental is in the area, how long it's going to take me to do the refurb, what the end value is with comparables in the area. So it really is basis, and you can build on that. Now we also have a Buy-Refurbish, Refinance and Rent calculator if you were to do an HMO. So I just want to quickly talk you through this. We do have another HMO calculator that you can be used, but this is specifically if you are doing, you're buying it and doing refurbished work on it. So I'll just talk you through this example. Again, anything that is in white is a figure that you enter, and then anything in yellow is a figure that's automatically calculated for you. So in this example then, the house is £50,000. Just like the other one, the fees are, you know, the 3% stamp duty, £1,000 solicitor, £750 odd for builder's fees. The refurb amount, what you believe the end value will be. This again is what the refinance element of is, so 75% of the end value that's predicted. Again, I'm not going to go into too much detail. It's exactly the same as the other calculator showing you. The bridging deposit needed can be altered. This is what the actual loan will be, any time for doing work, because that's obviously the amount of interest you pay. And these are the fees, which is obviously all related to this as well. This also incorporates a level of setup fee as well as the interest on it. Now, the more specific HMO side of it is if you now put in the number of rooms the property has, so if this one has 5, if you put in the average monthly rental per room, so let's be generous and say this one's going to get us £400, £400 a room, and we've got 5 rooms here. The rental per month then is £2,000. The mortgage on this is 3% of whatever the refinance value is, the mortgage, the remortgage value there. Now your maintenance, management and voids is very similar, but it's a little bit more expensive. So typically for a normal buy-to-let it would be 10% for an agent to manage it for you. For an HMO it's 12% because there is a little bit more work for them to do with managing an HMO. You've then got a bills column. So with an HMO, obviously you are providing pretty much everything for them. You're providing the heating, the lighting, the water, etc. So there are those bills to pay. So a tenant would expect them to be covered within the rent that they pay, as they're just renting on a room by room basis. So what you'd put here are those kind of bills. You've got council tax, council tax, water, gas, electricity, probably broadband, possibly phone as well with it. So all of these would be put under here. This is one where you would want to put in the cost of the furniture. So you do out the rooms with sort of beds, cupboards, desks and things, etc. All of that is going to cost money. So it is money that you need to invest into that property. So it's worthwhile putting that in here. This would then show you what your monthly profit is. So what you do is you take out your rental income there, it's 2,000. You'd remove your mortgage payments, your maintenance and management, and then the bills that you have on it, and that would give you what your monthly profit is. This just times by 12 is your annual profit. And then similar to what we've got before, this is the investment needed, so it takes into account the purchase price, the fees, the refurb, but it also then takes into account the furniture that you might have to buy. Now if you were to lease that furniture, that would just come and be added into a bill because it's a monthly payment that you will be making. So we've got that for investment needed. This is for cash. If you were to leverage it, then this is the investment that would be needed from you. So that's the bridging deposit there. In this instance we don't have refurb count, so it might be actually that we've got bridging for the refurb side of it as well included in there. this would mean then that the money you would leave into that deal is £8,000, or leveraged is 10,325. So then again, that would give you the return on investment for both of those, whether it's leveraged or not leveraged. So looking at this, that's a pretty, looking at that, this is a pretty good deal. So I hope that's helpful. I would use this one probably in conjunction with the HMO calculator, which I will also be doing a video on. I hope you found that video on how to use the buy, refurb, refinance and rent calculator useful. If you've got any comments, please make sure that you include them below, and please like and subscribe to my channel. I will be back again with another video on how to use the HMO calculator. And if you haven't already done so, please make sure you check out the buy to let calculator, which can be found right by clicking up here. And if you haven't already done so, please join our investor community and subscribe to the investor list at www.gcpropertygroup.co.uk. Many thanks.